All right. Well, thank you everybody for coming to this presentation today. This is one of a series of webinars that we're doing as Reconciled and presenting to the centers, nonprofit centers, and through ADAP in Vermont. And so thank you everybody for coming and for being a part of this. And my name is Michael Lee. I am CEO and founder of Reconciled. We're a Vermont-based online bookkeeping and CFO advisory practice based out of Burlington, Vermont. We got employees that work from home, accounting professionals that work remotely in about 10 states, about 50 employees. And we serve nonprofits, small businesses, entrepreneurs across the country, providing bookkeeping, payroll, financial statements, accounts payable, accounts receivable, donor statements, things like that. The full back office for nonprofits and other types of organizations. And we had the privilege of working with some of you this past 7 months on some consulting work around QuickBooks, around accounting services, HR, organizational services. And now we're hosting this series of webinars, these 6 webinars that will be recorded and uploaded as well. So if you missed some of this or you have others that you want to watch, feel free. You'll get a link to the recording. You'll be able to share this with everybody. And today's topic, Megan will be able to jump in here soon. But without further ado, I want to introduce Megan Tarnow. She is a nonprofit expert based out of Minnesota, and she's going to be conducting this webinar as a few others for us as well. And we have a few other Reconciled team members that are going to be presenting these webinars as well on different topics. But I'll let Megan jump in, who's one of our nonprofit consultants and experts, and you're going to find a lot of value out of this. What I'll be doing in the background is monitoring the chat, so feel free to ask any questions in the chat window for after the presentation's over. Megan will have about 30 to 45 minutes at most to present, and then we'll leave about 15 minutes at the end for questions. So feel free to ask anything related to nonprofits, related to this topic. I'm sure between Megan and I, we can answer really any question. Even if you have a basic accounting question, feel free to ask. But without further ado, I'll turn it over to Megan.
All right, thank you, Michael, for that warm introduction. I feel like this is an exciting and a terrifying topic to pack into 35 or 40 minutes, right? Like we could do 4 hours, we could do a whole day, we could come back and do more time, but we're going to squeeze it in and see how much we can cover in this amount of time. Oops. And so this is Michael did a great introduction, but this is a little bit of an overview of me. I'm also an advanced certified QuickBooks Pro advisor, a member of the Intuit Trainer Writer Network, and a certified nonprofit accounting professional, but not a CPA. I have spent the last 20 years building a very tiny firm in St. Paul, Minnesota, that's also virtual and all around nonprofit. I am one of the weirdos who decided out of the gate that that's who I wanted to work with. So I'm learning all the time more about how I live very much in that space of where QuickBooks and nonprofits intersect. One of the things I love the most is I started a group on Facebook called QuickBooks for Nonprofits, and it is now close to 4,000 members, and really just some of the smartest people I've ever had the opportunity to be in a room with, who are really all around using QuickBooks for nonprofits. So Michael's got all kinds of great resources. Y'all are welcome in that group as well. If I don't have the answer and he doesn't have the answer, guaranteed someone in that room will have the answer. So let's start talking about budgets. I went to my group, a couple of groups on Facebook, and said, what do they think of when they hear the word budget? And these are some of the words that came up. Like, people love it. They're terrified of it. Think it's baloney. Someone said it's fake numbers. Someone said it's stressful. It's a guide. It's a goal. It's a plan. I really love to think of it as a roadmap, right? It's where we thought we were going and how we thought we were going to get there. I had a member of a board I work with who said, you know, if you tell me we're going to Cincinnati, but I want to go to Cincinnati, right? But if I end up in New Orleans, I want to know what happened that we ended up in New Orleans when we said we were going to Cincinnati. So the budget is really our best guess as we're heading out of the gate of what is going to happen over the next 12 months for sure. During the current situation, I'm seeing more and more nonprofits doing rolling 18-month budgets, where as soon as they finish 6 months, they try to project out the next 6 months. So we're not, you know, going 11 months, getting to the end of the fiscal year, trying to come up with the next 12 months, right? We're creating something that starts to roll as we go. I'm going to let Tracy in because I don't know what Michael's doing. So that's our goal. I think it's important to think about where to start because we, as nonprofits, you probably realize we're not just doing one budget. I mean, we are, but it has a whole lot of component parts. And I just worked with one of my clients this week who brought me his budget, and there was nothing about that budget that mapped to the way we actually track his data, because he wasn't thinking of management really as how we were going to work with that budget, right? He was thinking about how to present it to the board in a way that they could understand. So hopefully you guys do this and let me know in the chat if you're doing it already, but I really recommend that you use your existing financial structure. It sounds like Michael's been working with you. And is everybody using QuickBooks? Maybe raise a hand or nod or do a thing. Yeah, everybody is. Okay, so then I can use that as our language, right? So when you're budgeting, we've got to be using our actual chart of accounts. And I know that some of our funders, like that's more than our information than our board needs. And some of our funders may have different views that they need of that same information. But we've got to start with our chart of accounts and then map that to any other format that people are asking for. And we need to be thinking about our own cost centers. So in QuickBooks, you're probably using classes to track that, right? So we're using our chart of accounts, we're using our cost centers, our programs, and then building that into all of the other people who need information from us. And then we have to understand the variables, right? We've got restricted funding, there's multi-year funding, there's timing of receivables. It's not uncommon that people will have, you know, funding from someone, some grant funding, and that budget year does not align with your budget year. So you've got to be able to pull out the portion of that information that aligns with your budget year and figure out a way to pull all that together. I recommend that we start with the things that we know for sure. Any confirmed funding, usually your staff costs, your occupancy, and from there, we make reasonable estimates of the rest. I know that there are some people who say start from zero, but unless you're planning to fire your whole staff and only bring them back, I don't know, why start from zero when you know you've got some things that you have already committed to, both income and expense-wise. Start with the things you know for sure. Make reasonable estimates based on prior year actuals and your best guess, and use that to build the structure of your budget. We're pretty much stuck with Excel, right? For most of us, I would recommend that we enter the budget into QuickBooks, but it's impossible to build it there because you just aren't able to see everything the way you need to. So this is a really simplified, shrunk down, made up numbers of one way you could look at your budget. I would start again with number one, absolutely using your existing chart of accounts. Also thinking about your own programs, however you define them, along with admin and fundraising. If you need to think about specific funding sources that roll up into a programmatic budget, add columns for that. Often I will have, we used to call it the big budget book, right? That had giant Excel workbook with multiple tabs of all of the different things that flowed into the overall budget. So this one has some sub budgets that are all going to roll up into the total program. We need admin, we need fundraising. If you're drilling deep into this, I've got a big number in contributed income under fundraising. That's where I put all unrestricted grants and contributions, partially because that tells me I can use it for all of my programs. And also I'm married to a fundraiser, and I feel like those guys don't get adequate credit for the work that they do. So if you've got a fundraising department, it's nice to give them credit for any of the unrestricted contributed income. I will always do a cost center, a class for shared expenses. So, I mean, you know what your rent, for example, is going to cost you. You've got a sense of what your website is going to cost you. And you could upfront try to parse that out between all of the other program and functional areas and even the grants. But I feel like for budgeting, it's easier to kind of drop it all in one bucket. Same, this personnel column is something that I've recently absorbed from a client who, again, your people are going to, like, obviously they work on your programs, they work in admin, they work in fundraising. For most nonprofits, this is our single biggest expense. But you don't know necessarily how you're going to parse them out, right? Until you do a time study. So instead of trying to like figure out up front and break it out, to start with them all in a single cost center and then divvy them up later as you go. So this particular client books all of their personnel expenses to that class for the entire fiscal year. And that's how they budget it. That's how they report it. And on the last day of the fiscal year, we did a journal entry that allocated it across for function. You may need to do it more often depending on the way your funding sources are aligned. This is where, so that part is fairly standard budgeting, right? The next thing and where it gets complex is understanding that we don't start at zero, hopefully. When you're creating a budget, you didn't start with no money in the bank. And we also don't want to end at zero. We're budgeting typically based on our income and expense accounts over a 12-month period of income, accrual-based income coming in and expenses going out. If you look at your audit, what they say is that line, like in QuickBooks, it's going to say net income. It really is a change in net assets, right? The impact of the net of all of those income and expenses is going to roll to your net assets, which live where? You guys can chat, or I'll just make stuff up otherwise. Right, so the net assets are living on your balance sheet. And at minimum, you've got two net asset categories. You've got without donor restrictions and with donor restrictions. I tend to break those out a bit more so that I can see what's available to operating. If the board has any sort of designated funding, If I have a lot of fixed assets, I will break them out separately because those are not actually available to us to use. And then those that are restricted to purpose or restricted to time. If I just looked at any one of my columns on this budget, I might be concerned. For example, what we're coding to the Awesome Foundation, we're coming up $49,000 short. And if I were just looking at my income statement, I'd be concerned. But what I know when I look at my balance sheet as well is that I've got $49,000 from them that is restricted to purpose, probably from a prior year, that I'm going to be able to use for this fiscal year. All right. Same thing from the other foundation. I've got 39,000 of their dollars that were restricted to purpose. And this is one of the things I think is super challenging about budgeting for nonprofits, right? Because we've got to record that income when it's promised. And so that flow of money in and out of our organization, like through our P&L, becomes really challenging. This is also telling me that I know the rest of my program, I've got $33,000 that aren't covered by anybody else. And I'm planning to use available, just unrestricted net assets for that. But I'm planning, right? The board should know, you should know, and your board should know, are your programs on their own making money? And to what extent are they being supported by other operations within your organization? Administrative rarely brings in anything, so of course it's going to have to pull from general operating funds. But our fundraising activity puts a lot into that, right? It's adding to what is available for everything. This is also a place where if your board wants to grow its reserve, you can start to plan and budget for that. It has to come out of your net income, that change in net assets. And we're also seeing that even though fundraising brought in some money, it did bring some that was unrestricted for purpose, but restricted for time. So we know that we'll have that going into our future period, okay? I almost feel like I need to stop and just pause for questions at this point, if anybody had anything.
Yeah, feel free if you have a question, type it in, or feel free to unmute and ask a question. Yeah.
Nope, everybody's just looking at me. Okay, all right. Yeah, somebody.
At the expense of showing my novice, this looks a heck of a lot simpler than what we do. We have like every budget kind of like each program, each grant has its own budget. That's the way I've been keeping track of things. And so I've got like a different sheet for every single grant and program, and like each grant is tied to its program. We don't really do a lot of mixing, and it's tough when the board or anyone else wants to see the big picture. When our director is like, oh, show me where we're at with something, I can show each kind of program, but this idea of putting it all on the same page, we've tried to do it a few times, and it's daunting. And you asked in the beginning who's using QuickBooks. Our accountant uses QuickBooks, but I don't actually have access to that. I can get a report once in a while, like once a month, to know like where we're at, but I have to like track everything separately to know where we're at budget wise.
Oh man. Okay, Michael, you need to have a talk with whoever their accountant is, because that's insane. You've got to have access to your numbers. Like if you don't have access, like how do you drive the bus without the map?
Yeah, we're happy to talk to any of the accountants that any accountants your team using if they're internal or external, to talk about what might help you people in operations, people who are not handling the books, what may help you and what kind of data would be helpful to have from a transparency basis.
Yeah.
And when she said Michael, she was talking about Michael Lai, not Michael Johnson, right?
Yeah, exactly. Michael Lee, make sure.
Sorry.
That's okay, anybody. And so, I've been a pro advisor for 20 years, right? And I was one of the a lot of you may have accountants who are like, oh, it has to stay on QuickBooks Desktop. Desktop is the only thing. Online doesn't begin to cover it. And I was one of them until about 4 years ago when I really went deep into using QuickBooks Online. And the fields and the functionality that we have available and the accountability and the transparency, because I feel like every nonprofit organization is a three-legged stool, right? And everybody focuses on the program leg, and maybe they're concentrating on the fundraising leg. The financial leg is like withering in the background, and like one poor guy is paying attention to it, which means the whole organization topples, right? And unless all three of those legs of your organization are equally strong and are speaking to each other in the same language, right? You might still be doing all those tabs, William, to have all those different budgets, but then like to do another one where they roll up and you can see what the whole organization looks like, all right? So, and it's lots of details. And once you get it, I would recommend that you break it down by month, because the only way to know if we're on track 3 months in is to know what we expected to happen in the first 3 months, right? Looking at our budget as a whole and comparing it to our year-to-date actuals, it's like, I don't know, right? Because our income and our expenses are not evenly distributed over 12 months. And so there's no way to know, are we actually okay or are we struggling, unless we know what we expected, where we expected to be right now. All right. And this is a ton of work. There's a lot that goes into it, and you're making your best guess, and we're pulling it into something that ties to our tracking so that we're using the same data all already across the board. All right. And I know that certain funders will have their own budgets that they want you to enter the data into. So take the time to map that budget to your chart of accounts and the way you're tracking, right? You got to know how they play together. Once we have that budget and we have a budget by month, we can use that to create a budget forecast. You're going to start with your actual accrual-based budget by month, and you're going to, replace projected amounts with actuals as you go. This gives us a place to enter new information as you get it, and also to understand where the year is going to end up. So the clients that we work with, we actually, again, we're doing this in Excel because the only tool I've found that is close to doing what we want is this thing called Profix, and it's a minimum of 10 grand a year. That's like per company. You're like, okay, I don't have 10 grand a year to spend on this. So really just taking that same Excel spreadsheet, right, where you broke it out by month, adding columns for the actuals. You can set up a report in QuickBooks that is a profit and loss by month for the year, showing all the accounts, columns by month, and then shoot that to Excel, map it once, and you've got sort of a find and replace situation on your actual data. And then you can project the future. Like, change your assumptions. What happens if that grant you expected doesn't come in? What happens if there's a pandemic and you can't provide services for 3 months, or suddenly everybody needs to go remote, right? It gives you a place to work with all of that without taking necessarily your budget, like actually changing your budget. It's like, for me, I'm a sort of the budget is sort of set in stone, and then we change the future. And the way things have been over the last year, certainly, that report, I think, is more valuable to the board than a budget to actual, right? Because your budget to actual, by the time you're showing it to them, is anywhere from 2 to 6 weeks, in the past. And things are changing so rapidly, we've got to know what things will look like in the future. And you're taking what you know. Yeah, and that's exactly what I do, William, actually, is I add columns for the actuals. So for each month, I can see here's what I projected and here's my actual. And what does that do? It helps with budgeting for next year. I can see where I was off and what I, where I was right. So exactly. And okay, so then we've got a budget forecast. The other thing we're supposed to talk about today is cash flow. And everyone I've seen in the nonprofit space do cash flow. Tell me, like, Propel Nonprofits, which are huge in here in Minnesota, FMA, which is based out in New York. The templates that I've seen from people is they have you all that work you just did on your accrual-based budget and the data you have from inputting your transactions, it's like they have you throw that away and start fresh from the cash that you expect to have come in and out. And I tried that, right? Years ago when I had a client, and who worries about cash flow? You worry about cash flow when you don't have any cash, when cash is tight. And when cash is tight, you tend not to have a lot of other resources either. Your staff is working really hard. You don't have extra money to hire consultants. Nobody's sitting around eating bonbons where they have time to like completely rethink all their budget assumptions for what's cash, right? And then it's challenging to tie that back to your existing accrual-based budget and reports to even know if you're right. So what we discovered is really the only difference between the accrual-based budget and actuals that you're already doing and the cash you have or will have in the future is the change in typically a handful of balance sheet accounts. Changes in accounts receivable, in prepaid expenses, in fixed assets, possibly, in if you're doing any kind of a building project, in work in progress accounts, in payable accounts, mortgages payable, credit card liability, payroll liabilities, any kind of loans. So most organizations, and potentially restricted net assets, right? Deferred revenue as well. But there's a handful or two handfuls. And we can know what is in those accounts. And because we know what is in them, we can project when they will change, right? So it's by looking at the detail in that handful of accounts and both tracking the changes on a 1 month basis and projecting the changes in the future, we can see essentially in that same budget forecast document, right? If we add those lines down at the bottom, not only where our budget is going to end up, but where we anticipate our cash will be on any given month. And if we also break that into, if we include the changes in restricted net assets, we can see if we are in a position where we are borrowing our own restricted funds, or hopefully we can look out and see when are things going to get into trouble. Do we need to tap into a line of credit? Are we comfortable essentially borrowing from our own receivables? We have the data we need to project those things.
I think that's a good point. I know for me, especially kind of being new to the nonprofit world, I'm not so used to waiting on the checks to clear, right? So if I get an $18,000 grant, I'm already spending it. So yeah, so that's a good thing to think about.
And I think it's like, it's one thing, I mean, where I see people get into trouble is not necessarily when they're borrowing against restricted funds or deferred revenue. It's when they don't know they're borrowing against restricted funds or deferred revenue, right? So for you guys, can you think of what those balance sheet accounts would be for you? And which one has the biggest impact on your organization? I'm gonna wait while you think.
I'm not sure if I totally understand the question, Megan. Can you rephrase it?
So I'm thinking, okay, yeah, it's a good point. So when we're thinking about the changes in the balance sheet that have the biggest impact on your cash,
Mm-hmm.
for you, what would that be? Is it like timing of receivables when those are coming in? Is it, I don't know, do you have deferred revenue? So knowing when that can actually be recognized?
I think that's what it is. I mean, and different grants have different, or if the invoice is wrong, that might be delayed 60 days. If I put a wrong 0 on one of my invoices, it's actually happened to me already. Because it has to go back through processing and someone else has to look at it and there's a mistake made, or there might be another mistake, and then and that sort of thing. And then also like our RAM project, we are guaranteed $18,000, and I've already started that project or spent a lot of the money, but I don't know. I've already expecting a check and it's been more than 30 days, still waiting.
Oh, wow. So that gets, that means you have to have cash on hand
Mm-hmm.
to cover that eventuality. So for you, knowing the timing of those receivables, right? How often is there that delay? And how much in terms of dollar value is that? So that you know that you've got to have unrestricted cash sitting around that at least equal to, what amount in order for you to feel comfortable.
Yeah, I'm not sure, Megan, how to get to a baseline, because for me, I've only been on with the organization for 3 months. I have a great accountant, but even we're kind of confused about how much of that actually is in reserve, because the account, we look at the, our bank account, which is not great information, right? We're like, oh, we have $40,000 in there or $60,000, but I don't know what portion of that is actually part of my reserve at this point.
And does your board have, do you have a board designated reserve?
I don't think so.
Okay. So essentially, do you have restricted funds?
Yeah.
Okay. And do you know on a monthly basis what's still in restriction?
Yeah, my accountant gives me an update on how much is in each grant and how much we've used out of that bucket. But
Yeah.
we have direct billing, so it's kind of money in, money out in some ways.
Right. Because usually with the direct billing, right, essentially it's conditional revenue where they don't give it to you until you've already done the thing.
Exactly.
So it's almost like a reimbursement, right? Although sometimes with an advance to get you started.
Yeah, I would say the majority of my budget is just that. And we only have about 10% fundraising. Yeah, and some unrestricted grants. So there's some money that I can kind of move around.
Yeah. So just understanding that too, though. And there's probably some reports that you can run out of QuickBooks to just give you a sense of the timing of your receivables. Like how quickly do those typically turn over?
Oh, that's a good idea. Yeah.
And maybe even look at per customer, like one of the government agencies might pay pretty quickly and another one's a problem.
Mm-hmm.
And also going, okay, what's happening that I'm missing a 0, right? Because ideally, if everything is flowing right, we're able to foot that and there's nothing left over. Like, for sure, and can provide documentation right out of your accounting system to send in and make that move a little bit faster. Because yeah, cash is everything, right? And it doesn't take too many of those large payments getting delayed an extra 30 days to suddenly things are tight.
Megan, if I can just weigh in as a center director, and we've got a mix and match here of staff and center directors. Jennifer, not having been through the summer yet, what you're experiencing right now is a COVID related, like all of none of us are getting our reimbursements on Net 30, so they're seriously delayed right now. But the worst time period every year is essentially the last quarter and the first quarter of the fiscal year. And if I were to recommend to all the directors an approach, it would be to look at your proportionality of ADAP funds versus others. And if basically when it comes to ADAP, you would need a reserve of 3 to 4 months of whatever that number is. And other directors may have a different formula, but I mean, it gets really bad depending on when the legislature ends, because the business office goes on break when the legislature ends. And you may get like basically from July 1st or usually they would go in May, but in recent years, they've been going on recess in like June or July. And you may have 3 months where you're not getting any reimbursements until September or October. And so you need to not only account for having a reserve of 3 to 4 months, but you'll probably should have a line of credit too. As a backup methodology. And I certainly welcome any pushback from other directors on that, but that has been my experience for 3 years running, is that you have to have you have to have reserves, plain and simple.
That's a really good point, Daniel.
Well, and at our center, what we have is a couple years ago, we had some extra money and we put it into a savings account that just sits there and it doesn't get touched. So we have like around 10,000 in there. I mean, and so anything extra we have, we try to add to that so that that's never touched, but it's there for backup.
Great. Yeah, great idea, Tracy. Thank you.
That's a really good recommendation. And Daniel, we did dip into the red for that exact reason. Before I came on the ship, when Stacy had several months billing wrong, again, probably put a wrong 0 or something, but it was 3 or 4 months delayed. It was actually exactly as you say, about 4 months we hadn't gotten paid, and we did have a line of credit, but that's a really scary place for an organization to be at 0 and dipping into and just waiting for these payments to go through. So I think going forward, it's a really good suggestion.
And it's harder sometimes to build that cushion when you're government funded, because they don't build, it's hard to make that argument that to build in anything other than direct and a certain allowable indirect, right? So you're hunting for other sources of income that are absolutely yours to determine the we of.
And it's really interesting, Megan, because you put that you should budget monthly, and we were talking as directors some months ago, and we realized that a lot of us have different approaches to how we manage the allotment that we have. So just an example is we all get $106,210 as a base grant, and some of the centers they will basically give themselves an allowance of 1/12 of that per month. Whereas my center, we see that as like seed money. So I actually bill for as much as I can, exhaust it, knowing that I'm going to run out in February or March every year. But it allows me to pour everything that I can on their dime into fundraising and all my other activities. I know that I'm going to recoup it in the end, but as a result, I build up a big balance heading into March, and then I start to dip into my own funds for the rest of the fiscal year. So some centers, they have 2 different approaches to that, and it's whether I guess it's also historically how your center or organization is done, whether you had a reserve from the past where you can sort of afford to not front load your expenses and your reimbursements.
I think that's fascinating. I feel like, this is my first webinar with you guys, so I don't know if you guys get to go do separate workrooms as part of this project, but that concept of seeing how other people in the similar situations are doing their budgets and kind of comparing and contrasting methodologies and approaches. And it's like, okay, where does the cash get scary for you? Where does it get scary for me? Is there, to see which one turns out to be, better overall, or some sort of hybrid? Because of course there's history that ties into that as well.
And And Bill is making William is making a really good point there, is like, and I'm not trying to take us down a road that's not relevant, but just to share, like, for thought for the people who are on this call, is like some centers, they, the ADOP funding represents, 50%, and for some it's over 90%. So it's also, again, it's about the proportionality and your funding mix is like, if you're that, for some it is that 10% indirect is a way to build your cash balance. You just make sure that you don't dip into that, so that you, over the years, you start to build some revenue. But anyway.
But a 10% indirect is also so low, right? It's like probably even only using the 10% indirect is a struggle, because it takes more than that. A lot of, depending. If it's a year where suddenly you have to do a whole lot of infrastructure because people have to work remotely, or you've got to build in a lot of COVID protection that doesn't necessarily count as direct unless they did some reallocation.
So is that, so the 10% indirect we get back, Daniel, if we don't use it, is that right? Should we put it in there?
No,
How
you.
does that work? I don't understand.
You include it in each monthly invoice.
You just include it, yep.
Yeah, it's built into all of your reimbursements. So you're basically, if you don't use it, you're pocketing it. It becomes your money. It's admin money.
Yep.
Oh, okay. I guess I didn't understand. My accountant's been doing all of that. I didn't know the indirect. I think we're using our indirect for other things though, right now.
Yeah, because I think typically you get it, right? They base your direct costs and then you get an additional 10% on top of that, of your indirect, up to whatever your agreed contract limit is.
Okay.
Okay. I feel like we kicked off the discussion part already, which is awesome. So like, for me, if you leave, and although I'm hearing something from people that to me is a little concerning, is that the books are off somewhere with an accountant. And for you, I mean, I just think it's really important for you to have access to your financials, right? It's your story. It's, and having it in a place where you understand it and you have ownership of it and you're using that to drive your organization. Like, I think it's imperative, all right? So when you're budgeting everything, if you leave with nothing else, start with your data file structure. And if your data file structure is dreadful, fix it so that it makes sense to the way you think about your organization now. Get everybody involved in that conversation. I see a lot of data file structures that nobody clearly thought about, and you can't pull data because it's a nightmare, right? Plan the change in net assets. So knowing where you're starting and where you think you're going to end up, I think is really useful. And then use that budget and the forecast and the cash flow tied together to envision your future of what things will look like for your organization. That's all I had. Now we can talk.
Great conversation, everybody. Let's keep it going. We do have 14 minutes left. So any questions, any comments? Megan's a great resource. So if you have other nonprofit related questions, accounting questions, whatever it is, feel free to ask. And Megan also lived overseas, so if you have living overseas questions, she can answer those too. But whatever questions you'd like to ask, we would want to be a resource. And again, this is being recorded right now, so we will you will have a copy sent to you, a link sent to you with all of this information as well, and it will be available. All 6 webinars that we're going to be doing for the next series, for this series, is going to be all downloadable and watchable later on, so you can share these with anybody. But feel free to chime in with a question, type it in, say something. Feel free.
Yep.
I just wanted to both build on what you just said, Megan, and then kind of loop back to what a comment William made earlier, is that from a board development perspective and a board perspective, William, you said like the board wants something more high level, and I think like that's so essential, because if you give a board like a ton of numbers, I mean, ultimately they're accountable and you need a treasurer who can understand that. and who you trust and who can say, yeah, this is valid. But like at a board meeting, people's eyes just glaze over. So, you know, I think they want to know, are we on budget or are we off budget? If we're off, why? What's our profit and loss? You know, the just some really high level. And I think that reporting should take like 5 minutes. And so if you can't get that high level reporting, I think that's a real problem from a board perspective, because you know, you can either there's no accountability or you're into the weeds if you give them too much information. And I think either of those is kind of problematic.
Yeah, and I think it's really important when you're presenting financials to the board. And I know that Michael's got a session coming up on this later of, you know, what do they need to know to make decisions, right? Maybe they don't need your expenses by line item. They want to see it by program compared to budget. Like, how do you keep them? There's a lot of board management on keeping them focused on the information they need to be able to make, you know, those high level, you know, high level decisions, and also to feel like they're doing their due diligence without, you know, going down in the weeds onto what did the newsletter cost, you know, because they'll go there if you give them a chance.
What do other directors provide their board with? I know that's something we struggle with. I mean, we're doing like profit and loss, but even our accountant said, well, it should be quarterly, should be monthly. And then we don't break it down because that just, we got in the weeds. We give them the high level profit and loss, but even that, you know, I don't know if that's even valuable information.
We provide them with the profit and loss, the monthly profit and loss. But I was talking to my bookkeeper and she was, and I can't remember what she said. She was thinking she might provide them with a different report. It might be helpful. Would something based off program or chart of account? I can't remember exactly what it was she said offhand, but
yeah, my accountant started doing like a grant report. So it's basically how much we spent out of each bucket, right? And then it gives you the balance for the year. So she started doing that. I don't know if that's helpful.
I'd give them a balance sheet.
That might be what she said is a balance sheet. I think she was saying like adding in that.
In the nonprofit world, but in terms of the boards, I feel like those are the two most common reports, and it's the P&L is, are we using our resources the way we plan to move the mission forward? And the balance sheet is really the, are we okay? Do we have money? And then if things are changing rapidly, right? When you're in a situation where what we thought was going to happen is so completely not what can happen, then that budget forecast and cash forecast in some sort of summarized version where they can look out 3-6 months becomes a really helpful report.
Yeah, in terms of the frequency, I would say it really depends on, like, are we okay? And if we're okay, then quarterly I think is sufficient. But if there's issues or cash flow is really tight, then I think monthly probably makes sense.
Yeah. William.
I have a question. I'm not sure exactly how relevant it is to, but I've been meaning to ask this of other folks. How do people think about when you have a grant that's it's just reimbursable for, you know, this is what you've said your budget is going to be for the year, and you only get what you spend. Obviously, you don't want to overspend that budget, but it's my perspective, and I want to kind of check this with other folks. You also don't want to underspend it either, right? You want to make sure that you're looking at that on a monthly basis so that you use all of the possible resources that you can, right? And you deploy all the possible resources, right? That you don't leave anything sort of unclaimed at the end of the year. But it depends on the type, right? Like there's some grants that you can roll over into the next year. In that case, it makes sense to maybe not spend it all. But then there's some that's use it or lose it, right? And sometimes that's hard to determine, although I just wanted to hear from other folks how they kind of think about that stuff.
So I think, again, it would be, you need to kind of look at the type of grant and the source. Like ADAP grants, they're actually more flexible than people think. You have a 25% But basically, if you present a budget to them, right? But basically, if the expenditure is not more than 25% of the total budget, you have flexibility in how you use it, and you don't have to submit like a new budget. And I think you are onto something in terms of not under or over. Well, I mean, the money's there, and you're either going to spend it or it's going to get carried forward. Like a lot of the things that ADAP is doing right now is like, and even this contract to do these are carry forward funds or spending authorities. So like last year I had like almost 15,000 in carry forward funding in my ED coaching program, and used it to invest in professional development for the team. So like your center has just such a tremendous opportunity to invest in your team through some of these funding, these funding sources if you're not using it. Like if I were any center and you had your ED coaching team and you're way under on your calls right now because the program is not doing as much, invest in your team to build them up to be better employees and better members of the team. I mean, my God, the money is there. But like thinking strategically about building your team and getting them their capacity and using them in other ways across your programs. So that would be like, so ADAP they're really valuable funds, even if they're in a program. There is some flexibility within the program to use them for things that you didn't originally conceive of. Others might be a little bit more restrictive. I have donors that I have to, if I change a big item over, over a set amount, then I have to kind of let them know. And so I find transparency is very valuable. Like, just letting them know, saying, hey, our circumstances have changed. And a lot of, especially in the COVID period, a lot of them are writing and saying, you know what, these were restricted funds now, but you can use them as unrestricted funds and use them for whatever you want. Again, just having those conversations and asking their permission if you're going to go outside the straight and narrow. So that would be my feedback, I guess.
Gosh, Daniel,
You say that you can,
I love that.
you say that you can carry over ADAP funds from one year to the next, or from one program to another?
From one, well, kind of both. Like with ADAP funds, like I'm just making this, I'm totally making this up, but within the ED coaching program, if you underspend by $15,000 and you can carry forward within the same program or get a spending authority. Things really changed this year because the federal grants actually changed from one state opioid response grant to another state opioid response grant, so they had limited flexibility. But you could also, write to them and ask and say, hey, could I use it for this other thing? And again, the state always has sort of these slush funds, and they need to know that what you're going to be accountable for what you spend and for your data and your results and so forth. But they're willing to work with you and invest and believe in what you are trying to do. But again, you have to communicate with them and be really clear about how you're going to measure what you do. So.
God, it's fantastic advice, Daniel. Man, that's awesome. What else, y'all? We got 5 minutes. What do you struggle with in budgets? Why'd you show up today? Jennifer came off mute.
I'm thinking, yeah, I can always learn more. I think, like I said, I've had high, like $1.2 million budgets in my past, but it's not in the nonprofit world. I find this much more challenging actually, and less straightforward. And it's good to hear from my other directors of kind of like what they're doing. And yeah.
I agree. I feel like nonprofit stuff, right, is like even the tiniest nonprofit is actually a C Corp. So we've got the same sort of reporting rules that, a massive corporation would have. And then we have restricted funding and conditional funding and all of that. chaos. So there's a lot of moving parts. You know, there's a lot to it.
So, you know, it's been a real journey, because in the 3 years that I've been in my position, we've progressed from very amateur. Sorry, my baby's in the background.
I love it.
Very amateur, you know, accountants and bookkeepers to a much higher level of ability. And we also, you guys helped, well, Reconciled helped us move from QuickBooks Desktop to QuickBooks Online, and from cash to accrual basis. So it's been a lot of transition and learning how to customize QuickBooks views and all of that. And for me, you know, as we've developed as an organization, and I hope that this is somehow relevant to other centers, like what I'm saying, well, like as we've developed and had more programs, I've found that like different financial people had different ways of labeling things, and we've had to sort of figure out how to collapse categories, create almost departments. Like the buckets was how I also envisioned my money, and I was drawing down the buckets and trying to determine from years in the past before me what money like were we carrying over, and that we had to expend on other things for growth. So it's been a process to sort of untangle and see the trees through the forest in a way. And so I don't know if anybody else has transitioned between like desktop and online, or different versions, or just trying to clean up the books essentially. I know Reconciled helped us a lot with that. It's still a work in progress, but so I guess that would maybe be my feedback, is if like you're also having trouble kind of getting things in a way that is readable and that you can relay to the board, then get somebody to help.
I guess I would like, we use QuickBooks Desktop, and you know, we've talked about whether we should go to online. I don't really understand the difference between the two and what's better. I mean, I know we're getting a lot more grant funding sources, so it's getting more complicated. And, you know, it was just that uninformed, uneducated, which one's better? I don't know.
I'll speak. I've got an opinion, as you might have.
Yeah, and Megan will end with this kind of answer, and then I want to respect everybody's time. But thank you for coming, and once and we'll stop the webinar. But yeah, great question, Tracy. Go ahead, Megan.
Because I was one of those, you know, only desktop people too. But what we're finding with QuickBooks Online is it has additional fields that we did not have in desktop. So one of them is called location, and I've been using that to track with and without restriction. I can get a P&L and a balance sheet that show me what is restricted and what's unrestricted. So it adds transparency to that cash and receivable question. I love the project center in QuickBooks Online. So projects work just like customer jobs do in desktop, but they've got their own little visual center where, and the visualization is for the life of that project, right? Because you've got grants that don't line up with your fiscal year. And to be able to see them all in sort of one dashboard of here's what, like probably the income's not going to show up until you've already done the expense, right? So your income is always going to be less, but it'll show you what you have to invoice because I've shown this much in expense and I've only got that much in income. And a lot of us, even who work with numbers, are still visual learners. So I love that. I like that it's not locked away on one person's desktop so that, you know, multiple people, even most typical is Plus version, which comes with 5 seats, like 5 seats, and unlimited reports only seats. So like your people can look without doing damage. And advanced, which is $160 on TechSoup, comes with 25 seats, I think. That additional visibility has just been phenomenal, I think, with my clients. Because people start to really understand their numbers and everyone's speaking the same language. And that's huge, right? Data files develop over time, and often whoever set it up didn't know QuickBooks, or didn't know nonprofit accounting, or didn't know your organization, and it's changed and it's grown over time. So it's worth thinking about, does the structure of your file continue to serve your needs? And I'll hush now, let you all go, because thank you for this amazing
Thank you
discussion.
for that.
Great. Thank you, everybody. Thank you, Megan. And we look forward to seeing you all at the next webinar in 4 more weeks. But see you next month. And again, you'll get a link to this recording and be able to share it and watch it again. Thank you, everybody.
Awesome. Thank you.